If there was only a YouTube channel that has been doing videos on Intel Corporation over the last at least 2 years now that were telling investors that the financials are screaming out to you that these products are terrible, that competition from Apple, from Nvidia, from AMD is eating this company's lunch, and that the stock price of this company is just going to continue to go further and further down until they figure some things out. Is today, after Intel reported their Q4 earnings that day, had they figured things out over at Intel? Is this the day we finally see a turnaround in Intel? Because I come to you here every single earnings season when it comes to any company we look at, particularly companies that we've really hit hard on this channel. I come to you every time they report earnings, actually looking for a reason, looking for an opportunity to actually go counter trend and actually start buying the stock. Because over the last year, Intel Corporation down over 41%. More importantly than that, over the last 5 years, this stock is down over 40%, while competitors like Nvidia and AMD are up hundreds of percentage points. And even competitors like Apple, which took all of their business away from Intel over the last 5 years, have performed well. Intel's old infrastructure and architecture of their chips is going by the way of the dinosaur. Let's jump into those Q4 earnings. Is this the day we change our mind on Intel? Revenue came in at $14 billion. That was a whopping 28% decline year over year. I tell you what, the good news is Wall Street was expecting 25%. So they came underneath expectations, but the expectations were already that the business was going to fall off a cliff this quarter. More importantly, the Q1, which we've got guidance of from Intel, was expected to fall off 23% year over year to a number close to $14 billion. So we were supposed to go from $14.49 billion this quarter. The company ended up putting up a number very close to $14 billion. And then we're expecting Q1 to be right about $14 billion. Well, unfortunately for everybody that has been bullish this company, and we'll see if how many of them chime into the comments. They were very active in the comments section of my videos a year ago when the stock was 41% higher, and even more so a year or two ago when the stock was probably almost 100% higher, saying I was wrong. I didn't know what I was talking about. I need to tune in to some YouTubers that are covering the great things that are going on over at Intel. We got guidance for Q1 for Intel. Revenues expected to be $10.5 billion. Am my glasses working? 10.5 to $11.5 billion. I'll remind you, we were expecting $14 billion worth of revenue for Q1. That would be a 23% decline in the business. We're actually going to come in between 10.5 and $11.5 billion over at Intel for Q1. An absolute abomination of these revenues, slipping from mid-teens down to near single digits. Now we have to ask ourselves, how are they going to reaccelerate into Q2 back to $14.5 billion? How are they going to reaccelerate in Q3 to $15.5 billion? How are they going to reaccelerate into Q4 to $16 billion? The answer to that question is the company is not going to be able to do that. And all along, all this time, the financials have told you that. You didn't need to watch Intel fanboys posting stuff on YouTube. All you have to do with most companies is come over here and look at the financials. We certainly don't bring these financials up on this channel for views and clicks and to make money. We do it because this is how most investors, great investors, actually decide if something is a good investment or not. We see over the last year, we went from $20.5 billion worth of revenue down to 14. And I'll remind you, in the upcoming quarter, we're actually going to go down to $10.5 to maybe $11.5 billion in revenue. Your cost of sales, what the heck's going to happen with those? Notice that we peeled off like $6 billion, not quite, about $5.5 billion worth of revenue. But look, your cost of sales barely moved. It went from 9.5 down to $8.5 billion. Gross margins literally went out the building for Intel. Here's your gross margin. Last year, you made $11 billion, now just $5.5 billion. That leaves zero money for anything this company wants to do. I keep hearing about fabs and all these new products. $5.5 billion worth of gross margin on $14 billion worth of revenue is going to leave $0 for that. And guess what? In Q1, you're going to have $10.5 to $11.5 billion worth of revenue. So your gross margin is going to go down even more. It's going to leave zero money for any of that type of thing, even if the government is handing out free checks to companies like this, which I really don't think they should. Research and development ticked up 10%. Research and development ticked up 10% when sales were down 28% over at Intel. I'm wondering what they're doing over there. I'm wondering how the CEO of Intel has a job at this moment. Really, how does anybody on the board of directors have a seat at that position at this moment? This is a complete disaster. Just an utter disaster. Your research development ticked up. Your marketing spend, how did that stay the same? You had a rapid decline in sales. How'd you go from just $1.9 billion down to $1.7 on marketing, general, administrative? People need to be fired over at this company and immediately. Like, we're not talking about phasing these things in. These people should be walking out the door as we speak. Operating expenses went up 10%. From $6 billion up to $6.6 billion. So that's going to obliterate your operating income. When you have just $5.5 billion worth of gross margin and $6.6 billion in operating costs, you're going to lose $1.1 billion. Last year, we made nearly $5 billion. On the 12-month basis, if you didn't already kind of throw up and kind of regurgitate your dinner or lunch or whatever meal you're on at this moment, well, you're going to do it now. You had $19.5 billion worth of operating income last year on $80 billion worth of revenue. That went down to $63 billion worth of revenue. And, you know, hide your kids, hide your wife, just $2.3 billion worth of operating income for the full year. Guess what, folks? It's going to go negative in 2023. It's not going to be positive. The next quarter is going to be worse. They're going to mount up losses all year at Intel. The cash is going to start bleeding out of this company. This is why they had to IPO Mobileye in one of the worst IPO markets that you can possibly think of. And the company is just going to have to continue to divest, cut expenses, cut costs, all while the competition from Apple, from Nvidia, from AMD, and a number of other chip makers is just catching up with this company. And not just catching up. At this point, they have passed them by, and now they're going to lap Intel. It's not that Intel's going to be able to catch up. They're going to be a lap or two down. They're going to have no money. They're going to fool investors or pretend to investors. They're somehow going to magically turn into a fabricator of these chips. They can't even make money selling them when somebody else makes them for them. I don't know who believes out there, other than the staunch Intel fanboy, that this company is actually going to be able to physically make these chips and actually make money when they can't even resell them at a profit. When you come over to the balance sheet, there's still some cash here. Okay, well, you know, look, the company still has some cash. They've got a boatload of inventory. We talked about this numerous times on our channel where, dude, they have all these finished goods. Look, last year you had $2.7 billion in finished goods. Now it's all the way up to $4.1 billion. What is that? We said this video after video. This is going to kill your gross margins. This is why your cost of sales just continues to not go down, because they're just selling through inventory that they basically overpaid for. And on now, your sales are not just slowing down. I mean, they're coming to a screeching halt over at this company. This is an utter disaster. When you come over here and look at the liability side, you do have some debt, and that's where some of the cash kind of, you know, you plugged a little bit of a hole there. You went from $33 billion in debt up to $37 billion in debt. Have fun trying to take on more debt when it's going to cost a company like this with negative earnings, negative revenue growth, negative everything. I mean, if Twitter has to borrow money at 11%, a company like this is probably going to be in that same boat if they have to go back and plug the hole there. Now, come down here to cash flows. You get a 12-month view here. I'm going to move myself so we can see this a little bit better. You pull down that just disastrous net income. Some of that is bolstered on the fact they did IPO some of their equity investments over the last year. But look, you went from 19 billion in net income last year, nearly 20 billion, all the way down to 8. You get some add backs and subtractions, including some depreciation, including stock-based compensation, which is just overly egregious, from 2 billion up to 3.1 billion dollars. With this stock performance and this company performance, shareholders should be asking for a massive refund when it comes to those things. Here's your net cash provided by your operating activities over at Intel over the last year. That is down basically 50%. You were at nearly 30 billion. Now you're at 15 and change. A 50% decline in your operating cash flows. That is why over the last year, stock is down 41%. It probably should be down more. I am seeing in the after hours, you're down about 7.33% over at Intel. We'll get to the technical chart here in a moment. If you haven't already thrown up over yourself and having to find the medicine cabinet to relieve the tummy ache that you might have, particularly if you own any shares. Property, plant, and equipment cost you $25 billion. You think this company is going to start building fabs with just $15.5 billion in operating cash flows? And what's going to happen to the operating cash flows when we're sitting here a year from now? Do you think they're going to go from 15 and go up? With this type of performance, with this type of leadership, with these types of gross margins? No, it's probably going to get cut in half again. So this company is going to have no money. We're talking about zero money to invest in these types of things. They are going to be in cutting and slashing mode because this is as disastrous as it possibly gets. They issued the $6.5 billion in long-term debt. Some of it was offset a little bit by that IPO that they IPO'd again in one of the worst markets. Some things that could potentially save Intel is a resurgence somehow in the computer market. People want overheated, underperforming chips that are in every Intel PC. You look at the benchmarks out there, and people would make fun of me a year ago when I talked about how, Apple's M1 chip, man, this is really good, especially in the laptop computers, maybe in the desktops as well. I guess you could argue that, but particularly laptop computers, which is the largest revenue center for the company. Last year, they did $5.8 billion in notebook client computing. I talked about how that M1 chip was great, and I know some of you guys are fanboys of one company or another, and that's not what this is about. If this company was growing their revenues, we'd be in this stock and we'd be pumping it every chance we get. The reality is Apple has completely lapped this company. Their technology is terrible. The performance of the laptops is terrible. And the customers are telling you that. You went from $10.3 billion all the way down to $6.6 billion. You made just $699 million in operating income on client computing. That number on its own doesn't mean anything, but here's the deal. You made $3.8 billion. The company made $3.8 billion in operating income. We're not talking about revenue. Operating income on client computing last year. Now you're looking at just $700 million. This company is on the verge of going out of business, okay? And I'm not talking about next quarter or even 12 months from now. But if you don't turn this around, this company will be gone, okay? Because look at your business. It went from $15.7 billion in operating income down to just $6.2 billion on a yearly basis. Now we're on what, a $700 million run rate? And I don't think anybody's anticipating that turning around, considering revenue guidance of 10.5 and 11.5 billion, well underneath the 14 billion most investors were expecting. Data center and AI, that's the hottest thing out there. That went from 6.4 billion down to $4.3 billion on the profit side. Just $371 million. I mean, they're basically giving those things away. So that will impact some of the other chip makers out there. So Intel's got all this inventory. It's going to impact Intel to a certain degree. But like when you look at an Intel in the after hours, it's selling off a little bit. When you look at like an AMD, selling off a little bit more, probably because of more the personal computing side of that business. But boy, both of those companies are eating Intel's lunch. Now, the way Intel kind of gets back at them is selling basically these chips at cost. But even when they're doing that, there's such less demand year over year. It's just showing you their products absolutely stink over at Intel. And anybody that believes they're going to go from making crappy products to actually physically making these chips like a TSM or a Samsung is smoking something that's legal in almost every state here in California. Look at the rest of the business. It doesn't really make a lot of operating income. In fact, we lost $1.1 billion over at the company. This is an utter disaster. It was well telegraphed here and on other parts of Wall Street. Now you're looking at a stock that has gone peak back in April of 2021 when this thing was like $70 per share. We've peeled off about 60% on this stock. Now, from a technical perspective, we've kind of been going sideways for 20 years or more on Intel. The range is on the very, very low end down here, about 16, a little bit higher than that. You could call it 20, up to about $34 per share. The stock is now currently in the middle of what I would call that range. We had this green box marked out on the channel. I am on a weekly chart. I tell you what, if you pick this stock off in the green box, which is south of 26, you're still making money. This is why you've got to set levels on stocks and hold yourself to them. The momentum, though, however, is so steeply down in this one. The guidance is so steeply down in this one. Their core business, which is still largely client computing, is showing me that this company has been passed by the Apples, by the AMDs in the chip industry. Once you get passed by, particularly when we're talking about a competitor like Apple, which has way more money, way more marketing, way better margins than you do, it's going to be very difficult. We're not talking about catching up. We're talking about just getting back on pace is going to be incredibly difficult for Intel. I would not touch this stock with a 30-foot pole, let alone any pole at all. There might be some opportunities to trade this as the volatility will be high. The company is going to have to come out with a lot of press releases when it comes to cutting costs. They did note in the press release they have cost reduction targets of $3 billion in 2023. It's going to need to be way bigger than that, Pat. And then an $8 to $10 billion by the end of 2025. Do you really want to invest in a company that has their revenues falling off a cliff, that have margins falling off a cliff, have competitors like Apple and Nvidia and AMD actually increasing their R&D spend, increasing their investment in their business, and already have products that are viewed in the marketplace as superior? Do you really want to invest in an Intel that is now going to have to be in cost-cutting mode? And look, this is what they have to do. But I would start by firing the CEO of this company. I would get completely new management over this company. I would take whatever is there in the buildings in San Jose, California, and throw them out into the garbage. This company needs to be remade. It's going to take a while, and I don't think any investor with any sense at all wants to go on that ride, at least in the shorter and intermediate term. We'll pick up the story again in a quarter when Intel reports likely another disastrous quarter. We'll keep an eye on this from a technical perspective. Again, there'll be opportunities to trade this thing, but that would be the only way I would ever type this quote into a buy order onto my account, is to trade it, some kind of short-term technical thing. This investment is a piece of garbage. Hopefully, guys, enjoyed today's video. We'll be back again soon. A little bit later tonight, I'm going to do a Visa and a MasterCard video, but that will be later on tonight. Hopefully, guys, have a great day. See you tomorrow for the Fang Stock Recap Show. Good luck with your investments.